In today's video, we're going to break down the Evergrande Crisis, a gigantic company in China that owes about $300 billion to creditors and now is having problems making its debt payments. I'm going to walk you through the basics of what Evergrande does, how it got into this mess, and what does this mean for you, your investments, and the economy. Hey everyone, my name is Preet, and this channel is for anyone who wants to learn more about money. Let's start with why Evergrande is in the news right now, and then we'll go back and explain how we got here. Evergrande Real Estate is a giant property developer in China. How giant? Well, they have developed 1,300 real estate projects in over 280 cities. And when we say project, we aren't talking single detached houses, we're talking entire communities of apartment buildings. But there are even some giant one-off projects as well, like the Ocean Flower Island project, which is projected to have 58 hotels just in that one project. So yes, Evergrande is massive. Now, Evergrande Real Estate is part of the Evergrande Group, and the most significant part, really. The company's massive size and aggressive growth has led them to branch out into the automotive industry, health services, theme parks, wealth management, and we'll come back to that later, and more. 3 years ago, it was named as the most valuable real estate brand in the world. But in the last year, its share price has cratered, dropping over 80% over fears that a collapse of the company is possible and possibly imminent. On August 24th, it's alleged that a letter was sent by Evergrande to the government telling them that they were about to run out of cash. Now, I say alleged, as the company quickly claimed that that letter was fabricated. But on August 31st, they made an official statement warning that they were going to default on its debts if they didn't find a way to raise some cash. So it's kind of an odd turn of events when you think about it. That letter claiming that we're going to run out of cash was completely fake. That being said, we have indeed run out of cash. On September 23rd, Evergrande missed making an interest payment of $83.5 million that was due that day. Now, they were not technically in default, as the terms of that debt allowed for a grace period of 30 days. Things have been crazy since then, with Evergrande working on a Hail Mary deal to sell part of one of their subsidiaries for $2.6 billion to raise cash to pay its debt holders. The 30-day grace period was scheduled to expire on October 23rd, and this deal fell apart, apparently because Evergrande was holding out for a slightly better deal with just 1 day before the payment deadline. However, on October 22nd, they did manage to wire $83.5 million to make its payment with just 1 day to spare. Problem solved? No. Remember, they have lots of debt and lots of different bonds they need to make payments on, and the next payment is due on October 29th, just 7 days later. So this basically guarantees that we'll be hearing about Evergrande's debt payment woes in headlines for quite some time until something material happens. Either they go under or a deal is worked out to completely restructure them. Before we talk about what could happen next, let's talk about how we got to this point in the first place. Evergrande has been known to be very aggressive in its use of debt to buy land and finance construction for a long time. Back in 2015, the company said it would reduce its debt load and didn't. At the end of 2016, they had $78 billion in debt, and now just 4 years later, they have $300 billion in debt. Evergrande is not the only property developer in China, and there has been a massive investment in infrastructure and property development for roughly 30 or 40 years that has completely transformed China into a world superpower. This mostly stemmed from the capitalism experiment in China and what's referred to as the opening up of China. Over time, starting back in the 70s, policies were enacted to bring about market reform, including allowing people to be entrepreneurs and start businesses for the first time, privatization of state-owned industries, lifting of price controls, and more. This helped fuel a dramatic urbanization of many rural areas in China. And with so many people living in China, this urbanization was big business. And Evergrande, which was founded in 1996, was one of the more aggressive property developers, selling people on the dreams of modern urban living. Evergrande and other property developers turned into bigger and bigger development machines. And these giant machines do not turn on a dime. And this has led to what are known as China's ghost towns. Huge developments of apartment buildings that are completely empty. One estimate from Capital Economics chief Asia economist suggested that the number of unsold empty apartment units in China as a whole could house a little more than 2 times the entire population of Canada. Let's just say that again. There could be enough unsold empty apartments in China to house 80 million people. But note that I said unsold. The same firm suggests that if you include the bought but not occupied properties, that adds enough space for 260 million people. These scores of empty buildings are known as China's ghost towns. So it's a bit of an understatement to say that overbuilding has led to oversupply. And likely due to a combination of the existence of so many ghost towns and other developers like Evergrande being aggressive, maybe not as aggressive as Evergrande, but still aggressive, with development, the Chinese government is not blind to the risks of overdevelopment and the financialization of housing in China. And by financialization of housing, I mean that many buyers are looking at housing as investments first and places to live second. The rate of home ownership by households in China is 90%. Compare that to 65% for the US. Further, 20% of homeowners in China own more than one home, so that's 1 in 5 households. As a result, the government instituted policies designed to deleverage the real estate sector. Earlier this year, the 3 red lines policy took effect. These are 3 different financial metrics. All basically are different measures of how much debt a company has, and each red line has a limit. If a company doesn't breach the limit on any one red line, they are allowed to grow their debt by 15% per year. And for each red line limit they breach, this allowable debt growth rate is reduced by 5 percentage points. Which means if you breach all 3 red lines, you cannot grow your debt at all. Guess how many lines Evergrande has breached? Yeah, all 3. So a company whose business model was predicated on aggressive borrowing is now no longer allowed to grow their debt. But Standard & Poor's estimated that only 6.3% of developers that they provide debt ratings on would not breach any of the red lines. And so while the 3 red line policy was brought in to de-risk the system, reduce cyclicality in real estate, and stabilize house prices, it looks like this policy effectively is too much too soon, as the very policy itself was a catalyst in this crisis, in that it has forced Evergrande into a position where it can't pay its bills. To be fair, though, Evergrande is so far in over its head that it's hard to absolve them of any guilt. Here are just a couple of reasons why. Because they can't borrow new funds, in order to pay their bills, they've resorted to offering apartments at 30% discounts to new buyers. Instead of normal pre-construction sales where you might put down an initial 5% deposit and then add in further deposits at different project milestones, they've been asking for 100% upfront, pre-construction. Not only that, as I mentioned before, Evergrande Group has a wealth management division. And in China, a wealth management product is kind of like a certificate of deposit or a guaranteed investment certificate with a higher than normal interest rate, but it's sold as being very conservative. And it looks like Evergrande has been selling these deposit products with offers of up to 12% return to investors. But some reports are emerging that money from some of these investors may have been used to address Evergrande's cash flow issues and also to make payments to earlier wealth management product investors, which is like the textbook definition of a Ponzi scheme. Not only that, Evergrande, instead of making the cash payments due to some of these investors, is offering them discounted apartments and parking spots in exchange. Now, this is really problematic, not just because they're offering a fire sale on real property in order to make their cash payment obligations, but this calls into question a very important variable. Is Chinese real estate overvalued? Will prices come down? And if they do, this creates a lot of pressure for all real estate developers in China because their ability to borrow money is based largely on what their assets are valued at on their books. And if the solution to Evergrande's crisis is a controlled collapse, that would necessarily mean selling apartments at a loss, driving down asset prices for everyone. So this certainly portends a local contagion effect, and I don't want to minimize that, but One of the reasons Evergrande is in the news so much is that people are worried that this is a so-called Lehman event. Lehman Brothers was an investment bank that went bankrupt in 2008 and is sort of the event that people point to as kicking off the great financial crisis of 2008-2009 that almost brought the world to a complete halt. People are speculating that Evergrande's crisis could be a Lehman-type event today. I don't think it is. Now, let's be clear. No one knows what's going to happen next because the information we have is always changing. But based on what we do know so far, while it's very easy to draw comparisons between Evergrande potentially going bankrupt and Lehman Brothers' bankruptcy in 2008, there is one big difference between the two. Lehman's business model relied on blinding levels of leverage. According to hedge fund manager David Einhorn, Lehman's leverage, if it was calculated properly according to him, was 44-1 due to the use of derivatives. That meant that a loss of 1% in the value of the underlying assets would destroy about half the firm's equity. And according to a former advisor to China's central bank and now a professor at a Chinese university, there are no derivatives built off of Evergrande's debt. Evergrande's debt-to-equity ratio as of June was 3-1. So based on that alone, again, not to minimize the local impact because real people are going to get hurt by this and currently are being hurt by this, the contagion to the rest of the world isn't something I'm going to lose sleep over based on what we know so far. With respect to my investment portfolio, I'm not worried about it at all. My time horizon for my long-term investments is still 20 plus years, not 20 days or 20 weeks. The trade-off for a well-built, well-diversified portfolio with a higher potential long-term return is short-term volatility from time to time. That's par for the course. Probably the worst thing you can do is make changes to your long-term strategy based on short-term news. You know, a lot of people predicted, for example, that markets would have a massive downturn when Trump was elected and wanted to pull their money out of stocks. If they did that, then they may have gotten paralyzed by trying to time when to get back in, possibly missing out years of strong gains. The point is, prediction about capital markets is pretty futile. By the time you've heard news about Scandal X or Crisis Y, it's already priced in. If you're trying to make predictions, you're basically trying to say you know something that hundreds of millions of other investors have missed. Now, like I said, the local ripple effects could be a tragedy that I don't want to minimize at all. Just looking at toilet suppliers, for example, bear with me, just the current unfinished apartments that Evergrande has taken deposits for amounts to about 1.5 million units. If there was an average of 1.5 toilets per apartment, well, that's a ton of toilets. Pun totally intended. Japanese toilet manufacturer Toto said China accounted for 30% of its profits. If Chinese real estate development slows down, that hits companies like Toto very hard. Same for air conditioning manufacturers, furniture manufacturers, and so on. There's a huge list of suppliers when it comes to property development. Evergrande Group itself has 200,000 employees, with Evergrande Real Estate responsible for over 83,000 of those jobs. But when you count the subcontractors who work on the developments, there are millions more people who rely on Evergrande for work. It's estimated that of the 787 projects currently under construction, more than 50% have been halted. And after the company said that they had restarted development on a number of projects and that everything was fine, some brave TikTokers were flying drones over these developments to show that there was indeed no activity at all in many cases. The big question at this point is this: will China allow Evergrande to implode, or will they step in? And if they do step in, to what degree? A couple of things to keep in mind. The government has been concerned about real estate over development and mania and the debt burden of highly leveraged developers, and that is precisely why they instituted the 3 red lines policy. In response to the Evergrande liquidity crisis so far, they have done something. They put billions of dollars into the banking system to help shore up confidence. But that being said, they have also signaled that no Chinese company is too big to fail. And what does too big to fail mean? This is a concept that some companies are so systemically important to an economy that a government has no choice but to save them if they really do run into trouble. And it's been suggested that China's policymakers don't believe too big to fail applies to any Chinese company. In other words, they might let Evergrande fail, and some have speculated that this would be a deterrent to other companies and might ultimately be more effective in terms of reining in the overbuilding and financialization of housing in China, making Evergrande an example. Some suggest that this is just posturing. The fallout of Evergrande collapsing would wipe out a lot of wealth in China, create a credit crunch, as the risk of lending would require higher rates of interest, which could further dampen economic activity and trade more broadly. No one knows how this plays out in the end, but because it took a long time to build up to this point, I suspect we'll be hearing about Evergrande and the fallout of this crisis for some time. Will they find a way out of their mess on their own? Will they collapse? Will the government engineer a solution? Your guess is as good as mine. But again, personally, no matter which of those scenarios plays out, I'm not changing my long-term investment portfolio strategy based on short-term news. But hopefully, you have a better grasp of why Evergrande is in the news and why it will likely continue to be in the news for some time. If you like this video, hit that like button and subscribe to my channel to learn more about money and managing your finances. And of course, hit the bell to turn on notifications for when I publish new content. And I will see you in the next video.